Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here for a daily Forex market analysis for February the 16th. And we're going to cover all kinds of topics that are going to be influencing this week. So let's get ahead with our disclaimer really quick to just remind us that this is for illustrative purposes only. With that, we are now going to go to our live screen. And we have the www.forex-trading-unlocked.com website already pulled up, and we have the workstation tab already up as well. So let's see what we have here. So first we have for economic numbers, excuse me, we actually have some that are coming out in Japan later on today, GDP being the major one, which is a big deal. Now let's see what's going to come down also on February. So we're starting off this weekend with something that could move, obviously, the Japanese yen, give that some action, and maybe even the dollar a little bit. So then we have tomorrow, we have for Germany, we have a bunch of minor EU numbers, except for the UK, we do have employment change. That's a big deal. Let's see what else we have here. We have the retail sales also for Australia. Price waves. Okay, so we have some stuff that's going to influence the pound as well as the euro. And then we also have, let's see, on February, we have PPI for the UK, current account for the EU. So we definitely have some numbers that could start to stir the, now this is big for the euro and the pound because of what's going on. Then we have CPI as well for the British pound. And then for Canada, we have CPI. So, and then we have housing starts, building permits for the U.S. Boy, we definitely have a good economic numbers week coming on this week. So we might see a lot of swing trades. All right, so now we're going to see what's going on with the 20th for our last day here. We're going to look at, then we have retail sales in the UK. We have some job numbers for obviously the U.S. And then we have manufacturing for Australia. That's a big one. CPI again for Japan. And then let's see what else we have. Then we have industrial production Switzerland. We have a bunch of euro numbers to end the week. So that those will be pretty much the minor ones to think about. Probably are not, they're obviously relevant, but not as severe as the ones that we are starting out this week with. So with that, let's go to our chart that we already have pulled up. We have a dollar index chart, and as you can see, this dollar bull that has started in the beginning of the year for 2020, and then once the month of February began, we had a nice big bounce, and this market has not seen one down day except for one. That's very, very impressive considering that the pound hasn't really moved very much, but the euro has, and so have some other major currencies. A lot of it fundamentally being driven by the coronavirus totals. Things are supposedly starting to subside. However, that still remains to be seen on how much of an impact it will have on your markets. So right now, this trend is making higher move highs. It is a very vicious bull. So this is going to be one of our fundamentals that we're going to pay attention to as we cover these currency crosses today. So now we're going to jump to the Euro US dollar. And we have had a very interesting trade in this market for the past 2 weeks, which is just like the dollar index. Look like this. It's been down every day except for one. That was last Tuesday when I had a little bit of a reprieve. So this is another market that is definitely right now trading with the way the dollar index is. So the only thing that we were looking for now for any type of corrective move, which we would like to see a bounce, you don't want to see a market just go in one direction, and the severity of this slope is pretty intense also. This is a very steep sloping slide. So even if it just goes sideways and consolidates for a little while, it would be good for just market digestion and just for how markets typically seem to react. Because otherwise, this is a very bad indication of what's going on in the EU, for one. And that could be one of the factors that's happening here too. You got to remember, Brexit is now over. We're 2 weeks going to the third week since Brexit has begun. There's a trade war coming up between the EU and the US. So they have to figure out all their trade deals for obviously the UK because of Brexit, and now also for the US. And then we have the coronavirus too, which is also having some sort of a bearing on things. So the big thing with the numbers for the euro now, technically we're overdone for bears. So if you've taken profit, you've definitely had a good run, and if you're a bull, you've been getting crushed. So I'd be very careful, wait for a trading signal to buy. Range traders may start to see some action now, because as we're in this big support area where typically the euro, no matter how weak it is or what's going on in the world, it just doesn't seem to want to hang around too long in this 109 even down to 108 half area, and now we're here at 108.29 below that. So as we probe these lows, we're going to have to be caution. Definitely, things are on the side of the bears. So shorts, if you're not already in, or if you want to jump in, it may not be a bad trade. The question is, what do you use for your risk? Well, that's a problem, because our upside pivot, or our pivot that's keeping this market down, is our last lower move high here at around $1.1094. All trading underneath this keeps this market sideways to lower. Then we have this blue trend line here. This is not a bad slope for the downward trend. So if we go sideways or start to come back up towards here, then maybe we have a nice, the downward trend is probably going to stay intact. But for a corrective move, that would be something that we should be looking for right now, because the markets just don't typically stay in a slope like this. But as far as getting bullish, we can't even think about that until we get above $1.1094. Technically, we took out the head and shoulders target and all the other targets that we had, even with this slight sell signal here. So as far as where do you look to keep on to take profits? Well, I don't know. I think then you can just keep on. If you're short, keep lowering your stops until you just finally do get a big swing back to the upside. And once again, the dollar index is key. Let's say the other currencies aren't necessarily so bullish or bearish versus the dollar tomorrow. But if the dollar index is strong, or tonight when it starts to open up, you could probably bet dollars to donuts that the euro is going to be under pressure as well. So we'll have to see how this pans out. It's Sunday. It's very possible that the market has a little bit of a reprieve from the bearish action just as the market's open. So you see some profit taking, maybe see the euro US dollar trading higher initially. But be careful. They may, once the European market's fully open for Monday's business and trading, and the DAX starts swinging around, that could be a whole nother story. At that point, the euro US dollar, if it's positive against the dollar, then I would say that you have a very good chance of seeing a head fake rally that will be laying on support, meaning that we will probably make lower move lows. For the past 2 weeks, we've made a lower move low even on the one positive day every single day. So not that we're going to have to do it tomorrow or today rather, but there's a very big likelihood of it happening one more day. So that's enough for the euro US dollar. Let's look at the British pound US dollar and see how this is shaping up. This market, however, has a little bit of a different story. It's trading in this little range here and has been for months, but we've had a nice swing. We made a higher move high and a lower move low, keeping us neutral. So this is a big deal because the fundamentals of the coronavirus don't seem to be impacting the pound as much. The pound has a lot of reasons to be bullish and strong against many currencies, especially like the euro. But now against the dollar, that's a whole different story. But until we have this trade deal done, which there's very likely that the UK and the US will solidify a deal very quickly. The UK and the US have a very good trade relationship and political relationship, so there's no reason to not think that this will not happen fast, and I think that that gives credence to bullishness for the pound US dollar. However, like I said, we made a higher move high and a lower move low. It's sideways, so these are our pivots. Above $1.2865, we're looking for a little bit of a challenge up towards this $1.32 even basically level. You can see that this trend that we've been riding for since the summertime, right here off this trend line here, it doesn't take much for this market to start to turn negative. We've been going sideways for so long that if we start to really hit support and fall apart, then a bearish run that could be extended for multiple months may be setting up. But right now, we don't see the fundamentals or the technicals that even remotely imply something like that. So if you're a bear, I would look to sell into higher move highs and try and pick some spots there for maybe a short scalp. Range traders as well, bulls, I think you got the pretty much not necessarily full momentum on your side, but I think it's a buy dip scenario for the pound. I could see it that where if the dollar rallies really strong, let's say against all the currencies in the world, the pound may have a lower day, maybe take a nice little hit, but then it'll absorb it even if other currencies are breaking again versus the dollar. The pound may bounce. While the dollar is still gaining strength versus others. So our key pivot for real failure of this total rally and confirming a bearish nature of the pound US dollar will be from this Carmel line at $1.2762, because then you'll be below this upward sloping trend line. And you'd be taking out this key support here that has been the base of the range trade that has been the trade now for 4 months in the pound US dollar. So we're going to be keeping our eye on that. But right now, I think you range traders and you bulls have the odds in your favor for right now. So now we have some trades to talk about. So the US dollar Swiss had a nice little pattern breakout last week. As you can see, we have a head and shoulders pattern here that had formed, and we took out the neckline, and we were just chopping around there. It looked like it didn't want to really go out any further. Now you got to remember the U.S. dollar Swiss. The Swiss has been a bull versus most currencies around the globe, and still remains one. It still remains a bull as far as I'm concerned, fundamentally and technically against the U.S. dollar. However, the coronavirus and the weakness in the euro is draining the Swiss. As you can see, the pound has been pretty sideways, and now we've looked at a currency that's been very resilient versus the dollar this whole year. Even still, the US dollar Swiss is not that much higher for 2020 versus markets like the euro that have been trending lower since the beginning of the year. The pound itself has been going sideways. So that's a big deal. So as far as stability in European currencies, they still are there in the Swiss, obviously, always. And then there's also the British pound. Now, the interesting thing about this move is that for our head and shoulders, we have a target up here of 99.16. So technically, we now have a reason for a bullish correction to continue. Now, we've made a higher move high, a higher move low, a higher move high, and we've come into the upside target zone for this initial correction to go. Now, this is from 98.20 up to 98.68, so we're right there. We settled, what was it, on Friday at 98.18. So we're right below our initial 98.20 level for our targets by upside target zone. 98.68 still gives it a little bit of room, but 99.16 is a big deal because then we hit the head and shoulders target. Okay, so we still have room if momentum is truly bullish for the dollar still for the next few sessions into the next week or so, then it's very likely that we will continue to gather momentum in this upside target zone and make a run at 99.16. This is a heavy area though, because one problem the US dollar has had with the Swiss historically is staying above parity, let alone crossing parity. And the only thing that's really driving the fundamental market right now and lifting the US dollar Swiss is this coronavirus. Once this virus does start to show some signs of subsiding, and we can have a bearing in that whatever impacts it has economically, that we can have some sort of a range for targets for production and consumption and things like that, you're going to probably see the Swiss snap back huge against the dollar. So I'd be very careful here. I think that if you're a bear, you can start to look for some selling opportunities up in these areas, or especially as we get into here as far as options, you can start to become a bear with options, where you really start to at least give yourself a really good risk reward ratio and putting the odds in your favor of being profitable. Because even if we don't become a bear and start to break off these levels, the odds of consolidation and sideways trading is really, really high. So at that point, you could start to sell into highs, whether it's the futures or the cash Forex market, or there's definitely binary options and futures options plays such as credit spreads and certain binary levels that you could sell right around or above these upper extremes here as we start to run out of gas on a corrective move. So right now this is only looked at as a corrective move no matter how strong the dollar index is, and any turn in the dollar index is really, really bearish for the US dollar Swiss. So be careful with if you're a long player here, you're right at this beginning of this target zone, so keep your stops tight. In fact, this 97.41 here, this yellow line, this is a big deal. Any failure from here or break back down to these levels most likely means that the Swiss is going to regain momentum, and you'll be seeing this upper sloping blue line here being probably tested and probed very, very quickly. Where I mean, see how this market fell from this higher move high in just 2-3 sessions, the volatility it had. Then it took all these other days to get through all to recoup that, let alone now look at how much time has passed and how little it has gone. So the energy and momentum is to the bears. The expectancy right now is for the bulls. So these are your pivots, and the 97.41 definitely becomes a very bearish level. If you are long as the market comes into this, I think you're going to get into a lot of trouble if you don't get out right around there. Okay, so now to see what else is going on in the world, we're going to go and see how the Japanese yen is looking. Now this US dollar yen market has been a bull for quite some time. As you can see, the market is still above that upward sloping blue line. That is the trend line that is keeping the long-term trend intact. It has been going on for half a year now. Here's a reminder also to subscribe to our YouTube channel at YouTube/Forex-Trading, Forex Trading Unlocked. And here we have our key pivots. Our last higher move swing low is 108.30 area, and anything below here already takes us below this upper sloping blue line, meaning that the bull trend is going neutral to bearish, and then a failure from this swing point also confirms bearishness, meaning a turn in the overall trend for the US dollar yen. However, I don't think the likelihood of that is very even remotely a chance in the near future. I think if anything, you're more likely to make a run at this $10.14 area. Now, why? Considering we've had two downward days, it does look like it's starting to run out of gas here. Why would I say that I think it's going to make a run? Well, here's the deal: is this last swing low here, higher move low, came up into here, made a lower swing high, but then it came here and made a higher move low. Now it's made a higher move high with a higher move low again. And now the question is, do we continue lower today as the markets open and start our week, or do we make a run back for resistance? If the market is higher today and it takes out the high from Friday, which was, let's see, the high from Friday was 109.91. Any rally above that really has any bearish position in jeopardy of being stopped out or being run over, because a challenge of $10.14 will have us pressuring higher move highs and a breakout to the upside up to around $1.10 half. We have a longer term upside target of around $1.12 to $1.12 half for the US dollar yen. So even if there's a sell-off in the US dollar index, we are bullish this market. We're looking if there is a correction for any other reason to look to buy this market at a better level, like a correction down to this 109. Coming into this upward sloping blue line would be ideal to have a slow breakdown into here over the next couple of weeks, and then all of a sudden, boom, we get another big rally to the upside. So, but with the dollar index running as it is, if it's higher, in this market, when the dollar index was lower, even the US dollar yen is higher and has been over the past 6 months. So it has strength, and especially with the US dollar index climbing, that gives me more reason to believe that we're going to have a challenge of $10.14 sooner than later. So in that same time zone, we have the Australian dollar, US dollar. Now this market has had every reason to be selling off for quite some time. However, the inflation fears of China seem to be kicking heels up and helping this market start to set a base. Now it has made continuously lower move lows and lower move highs. So right now we are neutral until we get some sort of a reason to do one or the other. Right now we're looking for a breakout from 67.51 here. Anything above here confirms this market's wanting to base and try and get a corrective move higher. This market wasn't a good uptrend a while ago, but this whole year it has been trading lower. So, and any failure, if it starts to come back lower and test support, if it takes out 66.61, look out below. This market is definitely falling apart. Now, that would mean also that the inflation numbers do not outweigh the damage done by the fires and still that continues to be done that the Australians are dealing with, not to mention the fact that the coronavirus is also impacting them in a very, very big way. So in that same area of the world, let's see what's going on with the New Zealand dollar, US dollar trade. This market has been in a bull market for quite some time. Now, this low that it came off of a couple sessions ago, we are watching to see what happens here. This is a big, big deal here. It's made higher or lower move lows and lower move highs consistently. This was a very big bull versus the dollar, no matter what was going on for a very long time. The coronavirus has been the one thing I think that has really hit this market hard. Right now, they're starting to say that the numbers are not growing at the rate that they were. This is a positive sign. If this market starts to see that there's a relief in the coronavirus, even though we don't know the full economic impact yet, you might start to see some bullish moves come here in New Zealand dollar, US dollar. So the key is a breakout here from the high from a few days ago at around 64.89. That would be a confirmation that we have bullish strength. And then I would use caution selling into this thing, because I don't think that any rally right now, if we should start to make higher move highs and confirm higher move lows, that would be the situation where you may see the New Zealand dollar be breaking away from the dollar direction and fundamentals that have been hammering it. And remember, we have this gap right up here. So to get back up to 66 even here and fill that gap, this market, when it wants to run, you can see how it exploded here. You can see how it rallied from December till the end, just to the end of the month, and then it came back in January in a big way. So now we've done that. Markets go out like they came in. Now we're getting our balancing. No reason why this market couldn't continue the trend higher. Also, we take out this upward sloping blue line, then that's a whole different story. Then we're looking for newer move lows, especially for a test of the 63.74 area. Any failure from here has this market completely on edge, and looking for lower levels to all the way down past the 63 even area level. So definitely be careful. There's definitely some bearish momentum in this market, and I would not be playing around with it right now. I think range traders, you got a good chance. Aggressive bears that want to sell into this move right now using the 64.89 as your risk area, I think you got a nice shot, at least for a test of this upper sloping blue line. And definitely if we get below it and then trigger stops off around 63.74, I think any aggressive bear right now is going to have a really nice lead on a big trade. But that doesn't mean that's going to happen. If you're bearish here and you don't have your risk level here, you're going to get clobbered. I'll just tell you that much. Now, if you're a bull and you're aggressive, now might be the time to start to buy down into this area again, 63.74. But if we fail this from this upward sloping blue line, I would start to get out of your longs and be very careful, and especially if it fails here, because I think your selling momentum is just going to pound this market if it goes lower from that level. All right, with that being said, we're going to go jump over to North America, because we're just looking at a very nice signal that has been shaping up here. So now we have a bearish engulfing line sell signal that was triggered last week. The market traded lower and has consolidated, and even on Friday settled with a negative close. Now, one thing about this market is it has been vertical. It was originally a creeping bear that finally made a higher move high here the last week. This is a big rally that we've had since the beginning of the first of the year. Now is it time for a correction? Well, like I said, if the coronavirus fears and things like that do start to really subside, or seem to be subsiding as far as the market's concerned, we're going to see a nice correction in the dollar index. This could be the precursor. Maybe this news, maybe how the sell signal came out a little bit early ahead of the way things are turning. So I don't know. Like I said, if the fundamentals seem to start to fall off as far as their weight in this trade that has been the dollar rally, or helped sustain the dollar rally, then you could probably see a failure here as we open up here on Sunday, trading into Monday, and this downside target zone of $1.3140 down to $1.3096 looks like a very likely area to find at least a break to right now as far as a bearish chance here. So if you're an aggressive bear, I would say you just use this $1.3329 level right here. All trading below here has this market targeting this support band. However, if we get a rally that comes up and takes out this $1.3329, not only does it negate the sell signal, it totally targets way higher move highs. In which case, then we're going to break out, probably blowing through $1.33.5 and hitting $1.34 even before you know it. So this is a very steep rally. Markets go out like they come in. Now this is a key thing to take into account. Let's say that we are right on the short run of this sell signal. Now we're going to put this line here. This is a little line in the sand. Now, if we're right and markets go out like they came in, Let's make this a little clearer with some dots. Okay, so as you can see, we have our high here, correct? Now, we had this bearish engulfing line sell signal that happened the following day, which initiated our slide. If we are right, then the steepness of here, we should be trading at least right around this $1.3140 level area within the next week or so, probably by Friday. Would it be like by Tuesday or Wednesday? Most likely not. However, it's not outside the realm of possibility. It's somewhere between Wednesday afternoon and Friday that we come and touch this area down at $1.3140. And then this would be a nice area to see some bobbling like this, where you get just basically all consuming days just chopping around in this area here. That would be a good base for the bulls to gather their strength once again and then make a play for higher move highs over the longer term, especially if the dollar index continues to climb. Now, if the fundamental trade that has been helping to lift this dollar index starts to fall apart, truly, then I think you would have the bears coming back to this one in a big way, in which case then we will trade to get through this downside target zone and probably all the way get down all the way back down to this $1.30 area. This is because there's so many fundamentals that are bearish to U.S. dollar Canada that there's no reason to not think that once this one reason that has been driving it, meaning the coronavirus, once that subsides and is no longer such a variable, then boom, the air is going to come out of the balloon and we're going to come slamming back down towards support. And then you can see here right around $1.30 half how much consolidation there was here for a while. And this was back when the rest of the currencies were swinging all over the place, and Canada was just like nope, every single day, barely any touching of the higher highs from the previous day or the lows from the other days before. So range traders, I think you got it tough right now for the next couple weeks in this market. Bears, you have, I think, a really good selling opportunity right here, especially since you got the bearish engulfing line sell signal confirmation. It's not too late to jump on this trade. As you can see, we would normally be trying to get in. The close on this day was at $1.3285. The market settled at $1.3247 on Friday. So if there's even a little bit of a rally here, you could still be an aggressive bear here against that $1.3329 level and take a shot at a nice little corrective slide. Plus, look at your risk reward ratio there. If you can get in somewhere right around the close of Friday or even higher, but let's just use that as $1.3247. So you'd be risking basically 80 cents. But your target range though is all the way down here to $1.3096. So you're looking to make a lot more. You're double. You're looking at a nice 2-to-1 ratio there with a high expectancy of the trade coming to fruition. So excuse me, my mouth's a little bit tongue-tied today. All right, so now we're going to go down way south and check out a market that we've been watching for a while. Now, the US dollar Mexican peso trade here, this has been a bear for a while. As you can see, it's a long-term bear. And we were looking for a little bit of a basing, bottoming area thing to happen here, but it just wasn't having it. Now, the funny thing is that no matter what, even though the other major currencies have been selling off, and if the fundamental of the coronavirus has been helping to do that, not so with the Mexican peso. This, for some reason, the peso is just strong, strong, strong. And probably one of the main reasons is because the trade deal had finally come to fruition, and they were already working with us ahead of Canada. And so there's multiple fundamental reasons why the dollar would be weak versus the peso. Over the long term to begin with, it's not like it's going down to historical lows or anything or coming off of historical highs. So it's been hovering around 20 pesos to the dollar for a few years, so we're not even that much lower right now. And that was also a pretty strong exchange rate. So, and you got to remember, even if we were to get back down to 15 pesos to the dollar, I mean, you're looking at, well, in that case, it would be a 20% correction. Nice little area to look for support before then jump in for a long-term possible bullish trade. So right now, we'll just see how this goes. It's making lower move lows and lower move highs. Our pivot is right here at this last higher move or lower move high, right around 1883 pesos. And since we're hitting new lows as of Friday, I would be very cautious trying to be a bull here. Don't try and catch a falling knife. All the bulls have been getting just chopped up. Range traders, I think if you are looking for quick hits and are playing the bullish side, you might be able to make some money. But otherwise, I would look for rallies to sell with this market for a while yet. Now we're going to go over to look at the US dollar TRY. So the Turkish lira, this market broke out to the upside a week and a half ago and still continues to hover below highs. This is just a raging bull. I think that any correction you see in this market for a while is going to be one to buy into. I don't even think it's ready for a correction right now until the coronavirus and the things in China subsides. And until that happens, and especially with the stuff going on in the Middle East, I think that the Turkish lira, no matter what, is in for a world of pain. Now, not that it's going to be an explosive rally, and I'm looking for major levels to the upside. I just think we're going to continue to grind higher, and then we're going to have maybe another correction like this, sell off, then have a nice consolidated, slow grinding rally like this. This is what it's become. You're not getting these swings like higher move, high, a higher move low, higher move high, higher move low, etc., etc. Now you're just getting this choppy, grindy, barely there's not much of a range to begin with on most of these days. And the ones that you do, it's obviously where the market had been where it was, had a big, like this big rally here, came back, and even still the next day it opened lower. Look at how much it opened lower and it came back up. So it's almost like when you pull a life preserver underwater. You can hold it down there for a little while, and you can even use it like a horse or something keep it with your weight down. But no matter what, it's going to try and pop up above the water, and it's going to be lifting and making a run for the high, which would be the water line. That's what this US dollar Turkish lira seems to be trading like. It's like that. It's like a life preserver underwater, is constantly reaching to come back above the top. Where that top is, I don't know. I think you got to be very careful selling into this. And then even for bulls, don't be careful because you've already seen a big run here. So I would keep your stops tight for bulls. Range traders, I think you have an opportunity as a bear or a bull. Definitely as a bull, I think you have lots of opportunities for range traders. And then as a bear, I think you got opportunities too where you have the likelihood of you're not going to get run over. That's for sure, I don't think. Now we will go back to the Euro US dollar for one last look. Okay, so remember, this is our big indicator. This looks like the dollar index chart. Let's pull that one up again too, just to refresh your memory from the beginning of the video. Remember here, start of February, boom, 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 boom. Only one day that it was negative. Now let's go back to the Euro US dollar. Now, does the Euro trade the opposite of the dollar index all the time? Absolutely not. However, right now, it absolutely is completely in tandem with the dollar index. Remember, the euro is the biggest weight in the dollar index. The dollar index is creeping higher. It's not exploding higher. The euro is at least looking like it's exploding lower. But let's look at the range here. From this high up here, it's $1.1094 as our upside breakout point. So let's just use $1.11 even. We're at $1.0829, so we've moved $3. Not $3. This is $1.1090. So it's almost at $1.11. Okay, so from here, this is $2 down to this break here. Here's $2.50. So we're just under $3, between $2.50 and $3. Okay, well, it's been in only 2.5 weeks, but that's not the biggest range in the world. A $2 to $3 move in the euro isn't that big. Now, if we have another $2 to $3 moves continuing lower from this point, then we start to look at something different. Because as far as the year is concerned, we are coming off $1.12.5 down to $1.08.5. That's a little over $4 now. That's a nice move for the course of a month and a half. So, and especially because the volatility of the euro had been so tight and consolidated for so long, where it was stuck in basically a $2.50 range. So, but it looks on a chart like there's lots of action, but the real distance in itself isn't that much, and it's constantly finding support here right around where it's trading at now. So if the dollar index gets a turn, it's probably because one of two things. Either it's turning because for fundamental reasons, like I said, the corona thing is coming off the table, or the euro actually finds support and gets a bounce. Now we started out this video with a whole bunch of numbers telling you about what comes out, and I know it's always boring to hear those fundamental things first, but what do we look at? There's a lot of big economic numbers across the globe which are focused on what? The EU and the pound. Very big for this market right here. So expect to see either a very big extension of this bearish market, or we may be getting ready to start to see some swings as this market tries to find a bottom. So lots of trading opportunities here for the new week setting up. And please subscribe to our YouTube channel, Forex Trading Unlocked, or you can find us at www.forex-trading-unlocked.com for our website. And stay tuned, and also if you do subscribe, then you'll get notified when our video feeds are streaming, as well as when we download certain lessons and information about the Forex markets. So with that being said, thank you very much for your time, and always remember to have a plan, use stops, have a trading implementation for discipline is also for your money management. That's the biggest thing, is having that in place. And if you have all those pieces put together, then you're on track to having a good week, I would think. With that, take care.